This week's video, I'll be walking you guys through 3 bullish reasons that you should be buying Meta stock. Whether you want to trade options on Meta stock, buy shares outright, or dollar cost averaging into Meta, I'm going to give you 3 bullish cases of why you should be doing this right now. So if you like the sound of this video or like this type of content, make sure you smash this like button and don't forget to subscribe, because I do weekly content all around trading, fundamental analysis, technical analysis on stocks and on Forex. So make sure you stay tuned. So Meta has been absolutely smashed when it had highs back in September of 2021, had highs of 383, and now we are at lows of 139. And if we look at a year to date chart, we are down 58% on Meta. This is one of the biggest companies in the world, and in 1 year it is down nearly 60%, which is absolutely insane. And if you've been picking up shares along the way of this downtrend, I urge you to continue to buy, because we'll look back on this video in 2-3 years time and realize that we were completely wrong, and Meta has an intrinsic value of $200 to $300. So what are the 3 reasons? So you can see them on the screen and you might have already looked at them, but the first one is we are approaching the COVID low. So back in, what was it, March the 16th, 2020, Meta was at a low of 137, $137, and the low today is at 139. So we're only $2 away, and that's not a big move for Meta to do in an hour, let alone in a day. So we could be hitting the COVID lows of Meta. There aren't many companies that have hit their COVID lows. Like things like Apple, for example, is nowhere near its COVID lows at the moment. But that to me just shows you. And if we have a look at, if I scale this down slightly to a day chart, and if I look at the earnings back in 2020, I can go all the way back to 2020, and we'll take the earnings after the low. So they had an earnings revenue 17.7 billion, and earnings of, where we've got, $1.71. So what was that again? I just confused myself there. $1.71 and 17.3 billion. Now, if I scroll across just to the last earnings here, we have got 28 billion and $2.46. I know with different time periods and different quarters and things, but I would imagine Facebook is not that seasonal of a business. But you can see the difference in how much revenue and EPS that they have actually put together since COVID, and yet the stock is trading to those levels. Don't get me wrong, pretty unsustainable levels here, and then we've had this massive drop. And this earnings, complete miss in earnings over here has been the majority of the tank in Meta, and has just continued to go down. And again, part of it is down to the company, but the other part is down to the macroeconomic factors: high inflation, higher interest rates, all of these difficult things, as well as low consumer spending, Russia-Ukraine war. All of these different things is smashing the whole of the US economy, and Meta is actually getting hit as a result. And so is every other stock. But we can't let the crazy, irrational market or macroeconomics hinder our decision making in buying shares of a company. And this is where I think we'll do bullish diversion second, last. So then want to go into the significantly undervalued and show how much of a disconnect there is between the intrinsic value of Meta versus the actual stock price at the moment. So we're at 141, and I like to use Everything Money, big YouTube channel now. They're growing quite significantly, but they have their own platform. I'll link to their YouTube channel down below. I'm not sponsored by them or anything like that. I just like using their platform in terms of analyzing stocks. And one of the things that they talk about is there's 8 pillars, and Meta is an, as they call, an eight-pillar thriller, where they benchmark a lot of fundamental criterias on whether or not that it is worthwhile to continue doing research on this company. This is not a buy signal, it's not a sell signal, it's just to see at an overview how well is this company doing. And the bits that I like to take away from this, they're still growing their revenue on average across a 5 year period. They're increasing their net income, they're buying back shares, they're not diluting shareholders. They've got pretty good debt levels. Cash flow is increasing year over year, and they're trading at a relatively low price to earnings and price to free cash flow situation here. So that is a great thing to see. And again, if you look at analyst estimates here, they're expecting, obviously they got some decline in 22, but over the next 4 years, they're expecting, double digit growth to low to mid double digits. If we look at revenue growth, again, if you park this year, we're still looking at least low double digit growth year over year over the next 5 years. So taking that into account, what I've done is I've used their famous stock analyzer tool that allows you to put in some assumptions. And again, I've done a 10-year analysis, and it gives you some historic figures to give you a bit of a guide. But I've gone on the low end from a revenue growth at 7% and on the high end at 9%, where analysts had them at, 10, 11% at least on there. And then again, if we look at, the average here of their profit, I've again gone relatively conservative. Free cash flow margin, again, we've looked at, this is basically 30. I've gone between 25 to 26. And again, PE, they're trading at a very, very low PE. But again, I've gone from 10 to 11, and same for price to free cash flow. And I want to achieve a 12.5% return. When you have a look at that, it's showing that on a earnings multiple and a discounted cash flow multiple or value, that the intrinsic value of Meta on the high side is at 188 and on the low side is at 151. And again, we are trading at 140. We're nearly there, guys. We're nearly at the COVID lows of 137, and we're at 139.23. So we are, and again, I think this is worst case scenario. I at least think we've got at least 10. If I just put this to 10%, for example, analyze that, we go up to 201. So even if we think it's around 10% growth, we've got 60 more dollars, nearly a good 50% upside in this stock to happen if we purchase today over the kind of next few years. And that to me is a great reason, a second reason of why to get into the stock. So again, we've looked at it, we're at historical lows from COVID, and we've looked at their revenue and EPS back in COVID to where they are today, significant increase. We've had a look at their fundamental analysis at a glance. They are still growing their revenues, growing their net income, growing their free cash flow, buying back shares, great return on return capital, and they're trading at pretty fair valuations. We've then put in our assumptions on what we think Meta are going to do over the next 10 years and done single digit growth over the next 10 years and very conservative profit and cash flow margin. And even then, they're saying it's on the low end, it's at 151. So, $10 away from the current price we are today. So that's the first thing. And then the last thing is here, what I'm like with my technical analysis is that we're starting to finally see some good situation of bullish diversions where price is making lower lows and the RSI, as my indicator of choice, is making higher highs. It doesn't mean that you go buy in. If you are trading this stock, you might want to pick your entry at a more precise level, potentially use pivot points or something along those lines to do that. But if you are the average Joe investor that has a few $100s a month that you're currently putting into SPY, you could divert and you want to pick a particular stock, it may be worthwhile having a look at Meta in terms of dollar cost averaging in $10 a week, $50 a week, or $50 a month, depending on what you can do over the next 3, 4, 5 years, because you've got a good opportunity here to beat the index with just Meta in itself from there. And again, I've not even spoken about Oculus and all the new stuff in the metaverse and all these things. At the moment, if you look at their company statements, that those areas of the business are currently losing money, and they are still increasing their net profit. They're still increasing their net profit, revenue, and cash flow while holding those two losing businesses. So the way I like to put it is that I'm actually getting Oculus for free. When I buy shares in Meta, I'm basically paying for their advertising platform, but then I'm getting Oculus for free because when Oculus and the metaverse starts to take off in 5 to 10 years time and start becoming into a profit machine, because that's what Facebook are. They are a profit machine. Um, you're going to get all of that returned back to you by buying shares at today's value, which is significantly undervalued due to the macroeconomic factors, as well as, they have seen a slowdown in growth in terms of their Facebook ads because, we are having increased interest rates, less people are spending, so therefore less people spend money on ads. I get all of that, but you can't just look at the now. You got to look at Meta is still going to be around in 4 to 5 years' time. And just look at the platforms that they actually own: Facebook, Instagram, WhatsApp. Those three platforms, how many of those people, comment down below, that have not got at least one of those three kind of platforms on their mobile phone today? Let me know in the comments down below. I'll leave it there. Hopefully you found this useful. If you have another stock that you feel that you want me to do, comment down below. Also, check out this video on the wheel strategy where I try to make money by selling options, which I think is a great beginner's view into options trading. And I shall see you guys in the next video.